Good afternoon to all of our Eadon Co clients. We thought it was very important with the news out of America this week that we should share some insights with you all. I've been sat down with a number of global fund managers, and really what we wanted to do today was take that messaging from them and start to explain what this means to you, our clients. I've got two people joining me today. As you can see, these guys are perfectly positioned to discuss this recent news and what it means to you, our clients. So, as you can see, we've got Zach Berry. A lot of you customers would have spoke to Zach already. He's the head of client services. And what he's going to be sharing today with you is the conversation he's having. It's really a case of you guys understanding that you're not alone in this. We support a number of customers. So Zach Berry is perfectly positioned to be talking to you about the types of conversations he's having and also just the general queries around the recent volatility. We also have Jensen Bart with us today. So Jensen is the head of paraplanning. You'll see from the reports that he's written for the advice which has been provided and from the cash flows that he does with our customers. He's going to be talking about the overall landscape and really how this news is coming out and how the market's reacting to it. Jensen's in a perfect position for this. He reviews investment funds and pension funds day in and day out. So he's going to be talking about what's going on for most people with a pension. So I'm going to start today really just handing it over to the team and I'll recap things at the end. So I'm going to start with Zach. Zach, if you wouldn't mind, you speak to our customers every day. Just tell me how people are reacting to this news. What's the general feeling?
Yeah, thanks, Aidan. So a lot of the clients I've been speaking to have really just been concerned about what's going on at the moment, and rightly so. They've been asking questions of me about kind of what's actually happening, the reason for it, and what are we kind of expecting moving forward. So we've actually had a really positive year up until everything that's come out of America in the last month or so, particularly with focus on the last couple of days with the tariffs that Donald Trump has announced and introduced. So that's kind of been a shock to the system for everybody in terms of the scale of the tariffs. It's just taken everyone by surprise. They're a lot higher than we all thought and expected them to be straight off the bat. So unfortunately for us, it's meant that all the hard work we've done so far over the past year or so has been reeled back in terms of growth. So we are all feeling the discomfort at the moment, but essentially, really, it's my job just to reassure everyone that this is a normal part of being invested in the market. This kind of thing's happened many, many times before, and it's always bounced back. So it's just about holding our nerve at this moment in time, really.
Yeah, I mean, you raise a very good point there, and that's not really what comes with the territory of having, your pension money invested, which all customers do is that hard work you've seen sort of reel back in a little bit. But, it's easy for us to say that, things will settle down and it will pass. This is a huge economic shift. We know this affects people with cautious portfolios, people with high risk portfolios. So what are you talking to people about day to day during this volatility?
Yeah, absolutely. That's a really important point that I've been speaking to clients about because it's been literally the whole of our customer base that's seen the volatility. And on a wider scale of well, really the whole of the market has seen a shift. Of course, we're obviously wary about how things are going right now, but clients should be reassured that it isn't just our portfolios that are feeling the hit, it's the whole of the market. And this kind of volatility is actually something pretty much all of our clients will have been exposed to over the last 10 years or so with things happening previously, like the S&P dropping 20% in 2018 or COVID more recently where everything dropped, 30 to 40%. But a lot of clients wouldn't really have been aware of how it affected their investments. So for a lot of people, it's the first time they've had or have been able to actively check their investments on a more regular basis since coming on board with us. So we think that's a great thing. It's something we encourage is it obviously allows clients to have a much better understanding of how things are working for them as they get closer, as we've seen some clients moving into retirement now. So yeah, it's really a really good thing for us.
And we know obviously it's the team's job here that we manage the portfolios for the customers, not just from the outset, from the advisor's job of providing that advice initially, but through all stages of their lives. So I suppose question you're probably getting a lot now is should we be changing things? Should they be reducing risk? Or is it a case that the hard work's been done at the start of this and the right portfolios were given from the advice and it's a case that we just keep it constantly under review. So is this a storm that our clients just need to weather?
Yeah, so it's something that I do directly deal with every day in my team. I'm checking all of our clients' portfolios on a daily basis just to make sure we know exactly what's going on at all times. We're still very confident in all our strategies. And through the advice process, all of our clients will have had the discussions around their attitude to risk. So yeah, all clients go into the portfolios that are best suited to their risk and their capacity for loss as well. So our guidance, all the guidance we're receiving from specialist fund managers who manage billions and billions of pounds worth of clients' money are telling us to hold firm. All our strategies performed really, really well over the long term, and that's where we really start to see value. Pushing north of 3, 5 to 10 years if possible. And that's why right now we're not reacting to what's going on in the short term, as the global economy is still looking strong for the future, and the American economy as well. So, but the good news really for all our clients that I can reassure them is that despite what's going on, we're in their corner. So now it's time to just trust us and trust our process. And if there ever was a time where we do look or need to make changes, you'll know because it was really necessary for their portfolios.
Yeah, no, great. I mean, you raised some great points there. You really do. It's hitting everyone. Cautious investors, mid-range investors, aggressive investors. But you're absolutely right. The approach which was taken from the outset and the advice that they're given, they're in the right portfolio range. So the portfolios are built for this volatility. But no, Zach, we really appreciate your insights on this matter. It's reassuring. You hear these types of messages every single day with the customers. You're the one speaking to them. Is there anything you'd just like to add before I move on to Jensen? Any sort of sign-off message for the customers watching this today?
Yeah, so I'd just like to say really that, we really do understand the concern at the moment. What's happening is certainly something we're not liking to see. And we really appreciate clients getting in touch to ask the questions, as they're really important. But as I mentioned, the strategies are still looking strong over the long term. Although we've got to endure some short-term pain at the moment, things are still looking positive. So we really believe the best thing to do right now is not to react to what's going on, hold firm and stay where we are for the long term, because things will pick up again at some point, like they always have done before.
Yeah, no, thanks, Zach. Good message, and we keep encouraging all of you customers to keep reaching out to Zach and his team. It's exactly what they're there for. So don't hold back. If you've ever got any questions, this is exactly what Zach and the team are there for. So thanks very much, Zach. Jensen, I'll jump onto you. So coming at it from a bit of a different angle here. You're the head of paraplanning at Eadon Co, and work closely with each other. And we know that you review funds day in and day out, and you're part of the selective process, with our fund managers. So what are you seeing outside of our portfolios? This is happening across the board, I take it.
Yeah, so when we're analysing sort of pension funds, investment funds, or larger portfolios, that whether it's clients are invested in or ones that we're researching, it really is the broader stock market that's been effective. It's not just sort of limited to only our portfolios. It is the whole of market that is feeling it. And I think that's probably why the news and the headlines has been so strong, is because it is actually affecting the whole world and not just sort of one industry or one sector. And that's just sort of where the US is positioned. If they're sort of changing policies or tariffs, then it does sort of affect the whole world. But yeah, whether it's sort of active or passive funds, or whether it's funds that are sort of high in equities and stocks and shares, or if they've got a bit of a mix, then yeah, like you mentioned earlier, Aidan, whether it's high risk portfolios, low risk portfolios, it seems to sort of affect. The stories are the same. There's been a bit of a downturn and recent sort of short term volatility.
Sure.
We've seen some sort of active managers maybe sort of trying to sort of reduce risk, be more sort of selective in their approach. But yeah, the theme really is still the same. The fact that in the short term that they've seen a bit of a downturn.
No, of course, and it's great for our clients to hear. It can be very singular focus, can't it? You log in, you look at your portfolio. Is this happening to me? Zach touched on there. This is happening across the board of all customers, and you're seeing it from a wider point of view. You're looking at the markets, hundreds of funds you come across, so you see the impact is systemic. It's not just singular. So no, I appreciate that, and it leads me on to you're a bit of a technical investor yourself, and you know exactly where our clients' money is invested. So. Question to you really. You get a lot of feedback. You listen to a lot of seminars with our fund managers. You get to meet them, see where the clients are invested. Is there still value in the stock markets? And right now, should we still be investing clients' money?
Yeah, and that's one of our sort of investment philosophies, where we want to be buying really solid value companies that have actually strong foundations. We're not sort of buying companies that are going to shoot the lights out and achieve really high returns. We want to be buying sort of companies that have strong foundations. If you're taking sort of Apple, Microsoft, Amazon, companies like that, they're just not going to sort of disappear. They're going to be around for sort of forever and ever, and they're probably going to be even more valuable in 5-10 years time. So even though they've sort of been taking a hit recently, the actual foundations of these companies that we're invested in, yeah, they're not going anywhere. You're not going to see sort of Apple and Microsoft and Amazon sort of disappear off the face of the earth. But yeah, it's a potential maybe for sort of a buying opportunity if you're looking at sort of investing further. The companies that you've invested in are probably now, you can see it as maybe on a bit of a discount. So even if it's sort of small contributions, or if you've got sort of lump sums to invest, maybe if you do put more money in now over the sort of the long term, then you probably be looking at sort of strong growth if we return, and when we return to the levels that we've seen before.
Yeah. And the portfolios, you're obviously involved in this selection process with the fund managers, and you know exactly what makes up our cautious, our balanced, our growth, our aggressive funds. I suppose the diversification, the multi-asset approach with our portfolios, they're designed to sort of weather this type of volatility. They're all going to feel it still, but as you mentioned there, you're buying good fund managers with good assets underneath those funds, and they're still valuable, aren't they?
Yeah, absolutely. Yeah, and that's the approach that we take. We don't want to sort of just stick you in sort of one asset class. We do sort of take a diversified approach to it all. But yeah, if you sort of zoom out a little bit, the value that the stock market still has over the long term. Yes, in the short term, you might see that roller coaster ride. The charts might be sort of up and down. Yeah, if you zoom out, take a sort of step back and look at it over the long term, of course, there's value to still be had in the stock market. And we're not going to make any sort of rash decisions based on sort of short-term news because of the value that we're actually buying and the reasons why we're buying those companies.
Yeah, great point. Well, look, I hate to put you on the spot here, but from your perspective, you know, where does this land? I know it's hard to predict the future, but we had an interesting session yesterday, didn't we? We sat with BlackRock on their global seminar, and largest investment company in the world, 11 trillion they manage. So, you know, the news that's coming out from there, we want to sit back and listen. So they shared some fantastic information with the team. So how should we be reacting to that news and sessions from them?
Yeah, it was really insightful to hear from sort of one of the biggest player in the investment world. And I think what they were suggesting that the stock market really does like predictability. It likes to sort of know what's going on. And if Donald Trump can come out and say various things and nobody knows what he's going to say next, that uncertainty has really caused the stock market to sort of be shaken up a little bit. BlackRock was sort of saying that they feel like the likelihood of a recession is still quite low in the US stock market. And I think that's because the US economy is so strong and like the foundations of it, and it's sort of too resilient maybe to be tipped into a recession. And if you're looking at sort of companies from a company point of view, again, if it's looking at Amazon and Apple, they're too strong to not be going anywhere. They're going to be around for the long term, and they've got sort of leeway on margins and cash flow to be able to ride this out. So that was what BlackRock's main point. Recession's unlikely. The likelihood of it is low. The companies in the US are still very strong. US is probably still where the growth is in compared to sort of other sort of sectors like Europe and things like that. US has still got the best growth potential, the highest quality companies. BlackRock was seeing it as more of a period of adjustment rather than a crisis, and the fundamentals of the US economy still remain quite strong.
Yeah, no, great points. I think I got the same from the sessions we had. I mean, there's still going to be a bit of pain. You know, it's not going away just overnight. But these tariffs have come out aggressive, and we'll probably land a little bit, you know, differently. We've just got to keep an eye on things. So, Jensen, really appreciate you taking time to share those technical insights, and you'll see in this day to day. So please keep us up to speed as things develop. And yeah, look forward for you reaching out to the customers again with any updates. Thanks, guys. Great insights. Really good. From me, I suppose in my role, I'm quite fortunate to spend time with fund managers, and these guys have boots on the ground. You know, they've got greater access than most. I know I started my first conversations on Thursday morning, really early in the morning, and was back to back on this topic till later in the day. I spoke with two fund managers, actually, who are responsible for over about 15 billion of client assets. And then, as I just mentioned there, we touched on with Jensen and the other team that we jumped onto a session with BlackRock. And listen, easy for us today to say, but we're confident things will settle down. One thing I want to leave you with is a quote from world-renowned long-term investor Warren Buffett. And why this is important is because your pension's a long-term asset, and that's important to know. So the stock market is a device for transferring money from the inpatient to the patient. Okay, so market corrections are temporary. Selling during a dip locks in those losses, and volatility really is the price of admission for these long-term returns. So thank you to all of our customers. It means a lot. We really appreciate your support, and we continue to provide you with an ongoing service and look after you guys. We're here when you need us. It's nice to have the team on here, and you can reach out to anybody when you like. We'll be hearing from a close friend of the business, James Igo, who you've heard from before. Redmayne Bentley, they're responsible for about £8 billion of clients' assets. He'll be in on Tuesday. We'll be having a session and filming this, and we'll get his take on things. But for now, everybody, anything you need, please contact a member of the team and be in touch. And we look forward to hearing from you soon.